What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. Today, we're going to go over some of the greatest gains and losses posted on Wallstreetbets forum of the past week, so we can learn from other traders' experiences. Before we go any further, please note that we are not financial advisors, and any investment you make is at your own risk. First off, we have user Diamond Hands, who reports a $611,000 gain in only 3 months by buying and holding mainly GameStop, but also some Palantir, Tilray, Sonos, and DraftKings. Despite his username of Diamond Hands, he sold out when he was ahead and is now back into GameStop after yesterday's dip. He says he made the majority of his gains on GameStop, about $500,000 worth. His screenshot of his portfolio shows that he has in fact made $611,000 in the past 3-month period, but because he only has $532,000 in his portfolio currently, it is clear that he has withdrawn some money from his account. But he is now back in the game with $26,000 and 3 call contracts on GameStop, with $320 strike prices and April 16th expiries. The top comment accuses the OP of a deceptive username since he did not hold GameStop. The OP admits that he lost his nerve when GameStop rose to about $250 a share, but says that he's looking forward to the next leg higher. Responding to another comment, he says that he truly believes GameStop can reach $1,000 a share. Regardless of what you think about GameStop or his lack of diamond hands, you have to respect this trader's gains. Next we have user The Ron, who's found himself in hot water with his wife's boyfriend after losing $33,000 on options YOLOs. He had 7 options positions, most of which were FDs which have lost almost all their value by the time of this post. On a percentage basis, his biggest loss was from an 8.5 strike call on UVixie, expiring on March 12th, the same day he published this post. UVixie closed at $7.74 on March 12th, making his calls expire worthless. The UVixie, or ProShares Ultra VIX Short-Term Futures ETF, provides leverage exposure to the S&P 500 VIX Short-Term Futures Index, which measures the returns of a portfolio of monthly VIX futures contracts with a weighted average of 1 month to expiration. Basically, it benefits when the VIX increases and will lose value if the VIX stays the same or decreases. The VIX is a measure of implied volatility in the markets. During times of economic uncertainty, implied volatilities increase as investors buy up options to protect their portfolios from further downside. UVixie replicates the performance of VIX futures. A futures contract is basically a bet on the future price of an asset, in this case the VIX. If the VIX goes up, the futures contract and by extension the UVixie makes money and vice versa. The VIX is negatively correlated with the broad stock market, so investors often long the VIX as a hedge. For example, during the market meltdown in March of 2020, the UVixie skyrocketed 900%. Because the VIX is so useful as a hedge, investors are willing to bid up the price so high that the expected value is negative. Because of this, over long periods of time, you are all but guaranteed to lose money if you are long the VIX. In this Wallstreetbets user's long position on the VIX was especially risky because he didn't just own the UVixie, he bought calls on it, which amounts to stacking 3 financial derivatives on top of each other. The first derivative is the VIX itself, whose value is derived from the options market. The second derivative is a futures contract on the VIX, and that is a UVixie ETF. This ETF is also 1.5 times leveraged, and the third derivative is the call option that he bought on top of the UVixie. This gave him extremely leveraged long exposure to market volatility. If there happened to be a massive market crash before his call expired, he could have made 100 times returns, but the vast majority of the time, it will expire worthless. Unfortunately for this Wallstreetbets user, there was no such crash in the past month and he lost everything on this speculation. He also owned calls on Magnachip Semiconductors, GeoEV, the SPAC merging with EV maker Canoo, Fubo TV, Tanger Outlets, and United Wholesale Mortgage. While a couple of these stocks have gone up modestly over the past month, his strike prices were all so far out of the money that the theta decay outweighed the delta, and all of them are in the red, adding up to a $33,000 total loss. Next up we have user Winner Takes All, who, as his name suggests, seemed to have been a huge winner in the markets over the past year. 1 year ago, he started actively trading in a burner account with $69,000 and is now sitting on a 7-figure gain of more than $1,320,000. His account performance shows that over the past year, he has barely suffered a single down month, with his closing balance almost always above his opening balance. Compared to the S&P, his percentage gains are so massive that by comparison, the S&P's chart looks like a flat horizontal line. This is despite the fact that the S&P has had one of the best 1-year returns in its history in the past 12 months. His biggest winners during this time include some stocks that are too small to post on Wallstreetbets, but also calls on Boeing and ExxonMobil. He also currently has a position in Eventbrite, which is an internet-based event management and ticketing company. Its stock has done very well in the past few months leading up to the expected reopening. The OP offers some advice for others who want to be like him, and that is that when he was just starting out, he lost half of his investment in Yahoo but just kept at it. He says to just keep on plugging. In addition to Eventbrite, he also currently holds a position in Disney and several other stocks too small to mention on Wallstreetbets. Congratulations on your massive gains. Next, we have a portfolio 10-bagger on meme stocks posted by user Bromic Ribos. He has made more than 1,042% returns on his Robinhood portfolio in the past 3 months, in what appears to be a straight line up. Off a base of $4,000, that means that he made $40,000 during that time. His holdings were all the Wallstreetbets stocks, including Tesla, Virgin Galactic, AMC, Roku, and Palantir. His trades were overwhelmingly short-term options plays, mainly weeklies, but also including some intraday flips and overnight holdings. Most recently, he unwound positions in GameStop calls and GNOG. GNOG is Golden Nugget Online Gaming, which is a relatively small company engaged in online sports betting. Their main competitors include DraftKings, but by many metrics are more cheaply valued. In the past 5 days, its stock price increased from $14 a share to nearly $17 a share, a 20% increase. The OP sold nearly $10,000 worth of the stock on March 11th. On a separate issue, the OP acknowledges that he should not be using Robinhood to do his trading. However, he does not know what alternative broker to use that has a good mobile user interface. User Ragnaroktagon suggests TD Ameritrade Thinkorswim. Unfortunately, user LeFunnies says that Robinhood's UI is still superior on mobile because it requires less taps to execute trades. He's tried Charles Schwab, Chase, Fidelity, Vanguard, and Thinkorswim, but says they all seem like the mobile interfaces were adapted from their web interfaces. Leave a comment saying what you think is the best mobile interface for a trading app. Next up, we have user TraderRaz117, who posted a screen recording of his portfolio over the past few months. He started off with just about $2,000 in October of 2020, and his portfolio has steadily increased over time as he made consistent gains and deposited more money. By the beginning of 2021, his portfolio had grown all the way to $60,000. In January, his portfolio started to skyrocket as he played the GameStop short squeeze, reaching a high of $250,000 by early February. But in the subsequent month, he lost all of his GameStop gains and his account troughed at $45,000 on March 5th. It has since come back somewhat and is now worth $90,000. He posted a screen recording of his positions, which shows a very well diversified portfolio with over 50 stock positions, some of which were big winners and some of which were big losers. His biggest gain is on GameStop stock with an $80,000 to-date gain. He bought before the first squeeze and has diamond hands the position. He owns a large proportion of high-growth stocks and SPACs that are commonly owned amongst Wallstreetbets users, including MicroStrategies, Neo, Skills, and Roblox. He also owns some more obscure stocks, for example, B-Square Corporation, a niche software company with a market cap of only $62 million. His biggest losers were CCIV and Riot Blockchain. A day after making his post, he made a new post explaining his next big play. He has taken all of his GameStop profits and bought $90,000 worth of July 16th $100 strike calls, which says that he is confident that GameStop will rocket this coming week. Hopefully this does happen and his portfolio can rocket back up to $250,000. Next we have user Wallstreetbets with a jaw-dropping $79,694,000 gain, of which $70,907 of it was from a single day. He made these gains by holding 4,300 shares of AMC. AMC has been on a tear in the past few weeks, up more than 100% from $5.50 a share to more than $11 a share. Like GameStop, it lost the majority of its gains from the short squeeze in January, but has remained elevated and experienced a recent rally. The OP was foresightful enough to get in at $2.92 a share for more than 4,000 shares, and thus was able to make more than 600% returns. This level of returns is good for any trade, but especially because it didn't require the use of options. If they had been options instead, they would have been many times higher even than this. The OP has now plowed all of those gains into Palantir stock. He holds 10,000 shares of Palantir at an average buy price of $24.96. Palantir now makes up 100% of his portfolio, but unfortunately this trade has not gone as well so far. Palantir stock has had difficulty getting up above the $20 to $30 range recently, and has been subject to concerns over its profitability despite its fast growth and quality product. This elicits a comment from users Silvo and Cartagena, pointing out that now that the OP has lost $25,000 in his most recent YOLO in Palantir, he posts about his AMC gain, which could only have been from some time ago. AMC was only at $21 a share at the height of the short squeeze a month and a half ago. Even so, congratulations on your gain. Alright guys, that wraps it up for this video. If you like the content, smash that like button and subscribe for future content. Also, make sure you're following us on TikTok and Instagram, and check out our second channel, WSM Research. In the meantime, thank you guys so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.